Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We've got a great show lined up for you and a lot of special guests here. I'm Harvey Freed. To the right of me is Harry Glanz.
Good morning, everybody. Good morning, Harvey. Went down to the ballpark last night. It was a beautiful night in downtown Detroit at the ballpark. Game didn't end the way we wanted to, but Harvey, I got to tell you something. I got a ball for my future daughter-in-law. The
It's
right
a win.
fielder, yeah, that's a win.
It's a win.
So when the right fielder throws you a ball and you get it and you hand it to your future daughter-in-law, I think that's a real win right
That's a
there.
huge win.
Yeah, unfortunately, Tigers didn't win, but you know what? They're entitled to lose. If you play 600 ball, 625 ball, you're going to be okay for the rest of the year, don't you think?
They'll be showing up to the playoffs, that's for sure.
Well, hopefully the World Series.
Here, we're going to mix in some sports along with some mortgages and real estate talk. 1 hour worth. Of course, Lisa Lawson from our office joins us also. Hey, Lisa.
Morning, everybody.
Good morning. Lisa's got tons of information to share with us. We're going to be going over just about everything in buying and selling. And Matt Bush is back joining us again. Hey, Matt.
Hey, thanks for having me as always.
I just buy your own seat here, Matt, because you come in at least, you do 3 or 4 times a year at least.
I'll keep my alarm on for you.
Yeah, he's
Very
real
good.
good. Matt tells it like it is. He's a straight shooter. He's going to not give you the answer that you want to hear. He's going to give you the answer that you need to hear. So we always love having Matt on the show. And, Matt, I want to start out by saying, listen, in Detroit last night, it's a beautiful night out. Things were rolling. Good activity down the entertainment district as well as the Tiger game. Let's talk about Detroit proper real estate. What's going on? You are one of the experts in Detroit. You sell a lot of homes in Detroit. Let's talk about what's going on in the city of Detroit.
I'm getting even more and more requests for people moving out of the suburbs and into the city. I've actually gotten calls from 4 different markets, Columbus, Nashville, and Arizona, of people moving from there to the city. And they don't really have interest in being in the suburbs, the usuals, the Royal Oaks, the Grosse Pointes, the Waterside. They want to be somewhere in the city. So seeing a lot in the North End. So that's kind of Woodward, northeast of the Grand Boulevard kind of area. That's really been popping off. You're seeing a lot of development over there. Piety Hill, which is going to be south of the Boston Edison district, west side of Woodward. That's really seen a lot of renos also. And then, moving over to Woodbridge, there's just been a lot of restaurants too that have been popping up that are getting nationally awarded. And you're seeing people then kind of flock to these restaurants, going into these neighborhoods, seeing these houses that can be bought relatively affordably, fixed up. And now there's a sense of community in these neighborhoods too, which it's just great to see the city just kind of coming back. And, some will argue that it never left, and it really didn't. The spirit's always been here, but you see people moving from out of state, out of, the area and recognizing it's really been cool to see.
Well, listen, we love that, and we love the old structure. And if anybody ever comes to our office, which hopefully you will, we have all over our office all the historic homes and the neighborhoods in pictures all around our office, probably 40, 50 pictures. And they're framed. It's beautiful. It's looks like a museum in there. Really proud of that. And why do we have homes hanging up around our office? Because we do financing for homes. And we've done a lot of those homes in Boston Edison, Palmer Woods, University District, in Fitzgerald, which is coming back.
I just rode an offer on Fitzgerald last night.
Yeah. So for all these people, all you people that think that we don't know our neighborhoods, we drive them all the time. And if you go by 16231 Green Lawn in the Fitzgerald District, that's
I was over at North Lawn.
You're on North Lawn, so that's
1 block over.
I kind of know that area a little bit. Bottom line is this, is that when you find an area, when people, what are the priorities when people look for homes? Okay? They want a nice place to raise their family. They want a sense of community. They want a school district. And they want to know that what they're investing in is going to be safe, and it's a safe area. So we're seeing a lot of that all over right now. And we're talking about the age group. The millennials right now, the average age of a new home buyer, we talk about it, is, it's 27, 28 years old. And that's what's coming in the market right now.
Well, I'm glad you brought up the city of Detroit, because the number one thing about Detroit is the affordability. And we go against major cities all across the United States, and Detroit is still, it's on the way up. And, of course, we got some numbers here to share with you. Of course, Lisa, we like some numbers here. The average sales price in Detroit is still $118,000. Now, you're not going to go find necessarily that next step up house for $118,000, but definitely an entry-level house for $100,000 and $118,000. It's a good starting point for a lot of first-time buyers.
Absolutely. I mean, in a country where you can't really find anything for $100,000, right? Anything, let alone something livable.
Get a car. You can get a car for $100,000.
Right. You can sleep in your car, I guess, if you really wanted to. But the whole point is, in Detroit, you can still find amazing properties that are really affordable for first-time home buyers. And especially if you're a little bit younger, I think Detroit has so much more to offer as a community. Not only, we were talking about the restaurants, because it's a major foodie town, depending where you live, it could be walkable. There's good public transportation. You're down by the riverfront. There's got great concerts, great venues. There's just so much to do. Great museums, the DIA. I mean, just so much history, so much to do. And I think for, especially first-time home buyers who may be just starting out and might know that this isn't their forever home, that they want to do this for 5-10 years, maybe start their family there before, something, upsizing. It's just such an opportunity, especially at that price point, that I think people don't take advantage of.
Yeah, and we were in Fitzgerald, Puritan in Wyoming, for those that aren't specifically know where that is. And we're just talking like, take the lodge 10 minutes, you're right downtown.
Yeah.
Take the lodge 15 minutes the other way. You can be, Novi, Bloomfield, wherever you want to be.
That was a happening area. It's going to be happening
Yeah.
again. And I stand corrected. What I meant to say is the average age is 34. The starting age is 27 to 28. The people are looking. And the average age of a first-time actual home buyer is about 34. So when you see these people and they're buying them, we always talked about it. We joked about it. The millennials were going to be living in their parents' basement. They were never going to go ahead and buy homes. Remember we talked about that?
It's because their parents are never going to sell those homes.
Well,
Right.
So got to live somewhere.
Because that's what was going on in the media, in the newspaper, saying people are taking longer. It's not true. So you find home buyers now. They're starting to look for homes as early as, I know there's some 24, 25-year-olds out there. Keep going. It's great, even younger. But really start looking about 27, 28. The average age is now 34. And people want their own place to live. And you talk about those neighborhoods. The millennial population, that's the up-and-coming population. Boomers are going. See you later. Sorry, we're dying every day. And millennials are going to be the dominant population. Need a place to live. It's just a numbers game. It's replacing the population with home buyers. Now, Matt, we talked about this, too. People don't want to move because they've got a 2 1/8 interest rate.
Yeah.
I talked to a guy on the phone the other day. He said, I can't move. I have a 2 1/8 rate.
You can.
Okay, yeah. No,
You just don't want to.
You can move, buddy. But you're never going to get 2 1/8 again. It's not going to happen. You're not going to get 4 again. I don't care what anybody's telling you out there. So, and I've got another bone to pick after the break. The whole marry the house, date the rate thing for me.
Are we squashing that now?
No, I cringed when I heard that. But we won't talk about that now in this segment. But it was never. I never could be comfortable with that. But anyways, we're talking about home buying. We're talking about the areas that Matt Bush is really expert in. But there are a lot of great areas to buy in.
Yeah, we'll definitely go over all those fine details. Hey, if you want to join the show, 248-539-9797. All right, Matt, we started off with the city of Detroit, which is fantastic in the first-time home buyers. But as you mentioned, you're getting those phone calls from people across the United States saying, I'm ready to relocate. I like this city. I'm hearing great things about it. The sports, entertainment. Lisa talks about museums, the Riverfront Walk. I mean, there's just so many things.
Great
and
music
venues.
scene.
Yeah, just everything to attack. And again, let's talk about that step up. I saw some lofts. I'm like, I'm moving to Detroit. Unbelievable. Some really cool renovations that have been done, Matt. Those are the ones that excite me. The empty nesters that are looking at some of these cool old hotels that were converted, office buildings. There's some really unique properties out there that are very exciting.
Yeah, and I mean, that's happening all over. And again, rents are even affordable down there too, right? You'd be surprised how economically you can live. Now, you're going to fight with your car insurance company a little bit, but being down there, you can find a loft or studio space sometimes $800 to $1,100 a month, and you go to Chicago for a similar space, and you're looking in $2,500 to $3,000 a month, right? So, I always tell people we have almost everything that you can find in any major city, just at a fraction of the cost.
Yeah.
You just have to know where to look, or you have to be tuned in to what you're looking for, but you can find it here and live so much more comfortably. Just the dollar goes so much further.
Couldn't agree more.
248-539-9797. We got a little break coming up here, but we want to hear from you all morning long. I brought in some information about Metro Detroit. This is enough to get a lot of the listeners excited. Listen to these values and these average sale prices across the different cities. Northville was leading the numbers here, over $2.2 million. These are average sales prices. There's a lot of homes selling for top. Grosse Pointe Shores up there over $2 million. Bloomfield Hills 1.5. Birmingham, of course, 1.2. Franklin. Close to $1 million. That's the average sales price. They got a lot of old homes there that are being 6, 7, 800,000. They're bulldozing them. They're doing huge renovations to them. Rochester, Milford, Plymouth, all huge numbers here. I can keep naming the cities.
You're right, Harvey. You drive the neighborhoods and you go through them, and we take different ways to work all the time. We go around the city and everything. And what you said is that when you see houses being torn down, leveled, and you see the excavators there and they're digging new holes and all that kind of stuff. And there's some acreage involved, right? Now they're in Franklin, Bloomfield Township, Bloomfield Hills, there's a little more acreage. But when you still drive through Birmingham, you go through other places, go through Huntington Woods, same thing. Royal Oak, it happened. All these places up and down the Woodward corridor, you could buy a lot and build a house that you want. But if you're going to stay there a while, let's go. But you could go through all these neighborhoods. You could see. It's exciting to see excavators. They're doing their thing, and people are building their own homes.
Yeah, we typically always see it on the lake and all the little inland lakes, and of course the big water here that we have. We see a lot of tear downs, of course, but not as much as now. You're seeing a lot more in the suburbs, no doubt about that. At least
it's not even a tear down, a major conversion, like where you can't live in it for a few months because they're doing such major renovation.
Right
it doesn't
on.
always have to be a total tear down. I don't want to scare people. You know what I mean? Right. But there's some major things they can do, and we offer renovation loans. You can turn your 1,100 square foot brick ranch that looks like it was built in 1955 and turn it into the colonial of your dreams, into a 2,800 square foot wonder. And people are starting to do that because they have a little bit of equity. They like where they live. They might love the area, but they just, they need more space. And so there's so many other options. It's not just you always have to move. Sometimes it's let's renovate. Let's get a major overhaul going. Let's make this exactly where you want to be for the rest of your life. Let's put in your dream kitchen. Let's finish your basement. You know what I mean? Let's add on some square footage. So I don't, this is an opportunity right now with all the equity that people have to tap into it. And if you really if the whole construction thing scares you, because it can be scary, especially if you have to live in it or find somewhere to live while they're doing it, this is the perfect time to what we call, upgrade your home, sell it, use that equity as a down payment for the new home. And there's a lot of ways we can do that.
If I didn't name your city, don't worry. They're all going up in value here across the United States, more specifically here in our region in southeast Michigan, Clarkston, Sterling Heights, Livonia. Again, if I didn't name your city, don't worry. It's going up in value.
Warren,
and if you need Warren, you got it there.
St. Clair Shores.
All right. Matt Bush will definitely do your market analysis for you. All right. We're up against our first break, and we want to hear from you. 8:12 in the morning here. We've got our phone lines all opened up. 248-539-9797. We'll be right back. All right, welcome back to the show, 8:15 if you're just joining us. Yeah, that's right, Jack White's from here. We love celebrating all our local celebrities and stuff. But what I dig about the dude is that he shows up to the ball games, man.
Love
That's
the ball
some serious.
games the other night. Paul Sarin, our producer, director, and musical host, putting on some good tunes for us. Harvey, the lead-in. It's all good.
We'll take that.
Hey, I want to talk about mortgage rates. People want to talk about mortgage rates, Harvey. There's this thing out there that mortgage rates, are going down. I'm going to give out a public service announcement for everybody out there. If you want to know what mortgage rates are, all right, go to Mortgage News Daily, and you'll see what the mortgage rates are, and they're published. And all these things that people are hearing, and mortgage rates are 6s and the 5s are not. We can get you any rates you want, but you have to pay for it. If you really want to see what the true rates are, they're published every single day, and intraday as well. But I believe this. I believe mortgage rates right now are holding steady. There's a lot of pressure on the Federal Reserve to go ahead and lower rates. Federal Reserve is being absent about lowering rates. It's a political thing, as you know. Bottom line is I believe that rates are going to come down. Now, how far they're going to come down, they're not going to 4. They're not going to 5. Could they get into the mid to low 6s? Maybe. But this is going to happen probably toward the end of the year. Fall toward the end of the year. If you get a break and it happens sooner, that's right. That's great. Mm-hmm. But for me, you've got to be comfortable buying a house. Okay, you've got to be very comfortable in the payment. So, I'm going to throw this out there. I'd love for people to call in and tell me that I'm wrong on this. I never liked the phrase, marry the house, date the rate. I never liked that. I thought it was terrible advice. You have to be comfortable with your payment. There's no guarantee rates are going to go down. So when somebody tries to sell you, well, you can always refinance your house. No, you can't always refinance your house. Ask the people that bought houses 3 years ago, 2 years ago, 18 months ago, and they were in the 7.5 that want to refinance their house. It's just not happening. Maybe you changed the job. Maybe there were circumstances which are precluding you from refinancing your house. So when somebody tells you you can always refinance, sure, we would like that to be the case. But if somebody is selling you on that, and I use that word, if they're selling you on that, I never was comfortable with marry the house, date the rate.
I'll take the a little bit of the other side on it, just a little bit. Again, I think
I want people to take the other side.
Yeah.
I want you to call in. I want you to email me, call me, hunt me down.
248-539-9797. Just put your call in. But one of the things was the theme, the idea, I think, when it came out in 2020, again, we were in the pandemic, was, look, the inventory is very low. And if you could get your hands on a house in 2020, the equity is going to take over. And you're just going to be so far ahead of the game. And again, where the interest rate wasn't as important. Now, you're going to get a bite at that apple to refinance. And one of the things, Lisa, about families that bought in the last couple of years, they put 5% down or 10% down. They're waiting. And when they do refinance, they'll get the lower interest rate. They'll remove the PMI.
If the lower interest rate is available.
If it's available, they'll remove maybe the PMI or even reduce it.
Yeah.
Okay, so there are some advantages, hopefully, on the horizon.
Yeah, I don't think, and I hope, I guess it just kind of depends on what your intention was when you said date the rate. When people and I say date the rate, if the opportunity presents itself and it makes sense, we're going to refinance in the future and get you a lower payment and a lower rate. It doesn't mean that it's a guarantee, but getting your foot in the door and even getting you the opportunity, I think when we said that, especially in the past, was, you don't have the opportunity to I guess, take advantage of the market, take advantage of the equity that's being built. It still, to me, would make sense to, we'll say in 2020, buy a house. 5 years later, you might have 30, 40, 50, 60, $100,000 in equity. Some people have.
We see it. Yeah,
Lisa, I have no problem.
And you
I
could be
agree.
renting this whole time, throwing that money away. So for me, I don't think it was meant get in and maybe stretch yourself a little, and because we'll fix it in the future. That is not how I took it, although maybe that's how some people heard it.
I want to believe that. But I will say where I agree is when the time is right for you, regardless of rate.
Correct.
Rates could be 12.5. People bought houses at 17. If it's right for you, the rate is irrelevant.
It's about the payment and affordability.
Yeah. So exactly right. So you should buy a house. You shouldn't wait.
Correct.
If you can afford it and you find that house and you want to get in. It was because at the time they felt when rates were going up from, you ready? 3 to 7, that people wouldn't buy houses. So they said, marry the house, date the rate, because you could always refinance. It was because people were afraid they weren't going to buy houses.
Yeah.
I say buy a house at any time, regardless of rate, if it makes sense for you. And we've stressed that for over 25 years on this show, 35 years in the business, that it's an individual decision and you should do it when it's comfortable for you. People are going to buy houses.
Yeah.
Doesn't matter what the rate is. I just had a problem with the phrase because I think it was misleading. That's all I'm saying.
And I'll lay in the plane in between the both of you. When someone calls me and says, hey, I just got pre-approved for X amount of dollars, I want to go buy a house. The first question I'll ever ask is, hey, are you currently renting? And when they say yes, what are you paying in rent?
Correct.
That should be the basis by which you shop, not by the, hey, I got approved for $430. Let's go shop for something at $400, $430. Well, hey, if you're only paying $1,700 a month, let's find something in that, high twos, low threes. That's going to keep your monthly right around the same, because you don't want to be, house rich, but also house poor, right? You don't want to have, 100 bills now. You don't want to have to rent a small apartment and then heat a giant house, right? That DT bill is going to come in, be a lot higher. That water bill is going to come in a lot higher than your apartment complex.
We have clients that plan. Like I have a client who has a very low rent, really, for where they live, but they've been stocking away an additional $1,000 a month, knowing.
There you go.
So they might be paying, in their case, $1,200 in rent, but they're stocking away another grand, so they're expecting a $2,200 to $2,500 payment. I'm all for that. I'm not saying that you have to always, but you have to have a plan. You can't sit there and say, oh, I've been paying $1,500 in rent, and I'm cool with paying $4,000, but you don't have a savings pattern that establishes that you can do that. You know what I mean? Or you don't have enough money in the bank that you're putting in. You just want to make sure you don't have payment shock. It doesn't, we use that term in this industry because it's a true thing. People think they can afford it, but with home ownership comes other expenses. It just is what it is. And if you're not budgeting for all of that and understand all that, you can get, in I'm going to say a sticky wicket very fast. And that's not the point. We close on a house. We want you to be there for a long time.
Yeah.
We do not want you to have to hear, I got to sell my house in a year because I can't afford it. Then I didn't do you any good.
That's why it was cringeworthy to me, that phrase, which I'm not going to repeat ever again. Not going to do it, is because there are other factors too.
I think it was just too general and people interpret it in different ways.
Yeah, your value's going to go up, so therefore your taxes are going to go up.
Correct.
Okay, so again, there are other expenses when you own a house, and that's why we always stress you have to do what's best for yourself and your specific circumstances, your family, individually. This is, it's positional, right? However, we talk about, we love baseball. Baseball's all situational. What are you going to do in your situation? What are you going to do in a situation? Runner on second, third, what are you going to do? You got to move them over. You got to get that runner home. Well, we set people up for success.
Right.
And that's what we want to do. So that phrase really bothered me for the longest period of time. Now the reason people are gaining equity, they're gaining home value. I love the fact that they didn't wait, but maybe they didn't plan, Lisa, in their payment for that, that sticker shock, that, the shock of the payment going up when you're paying $4,000 in taxes, then the next year they go up to $5,000
or sometimes
$5,500, or it's uncapped, or whatever that is. So you have to figure all that in. So I just don't like the gimmicky. I guess I never did. I don't like the gimmicky phrases.
And that kind of brings us back to, that's why it's important to call someone that you know and trust that's been doing this, and not just some person that you click a button on the internet and they're throwing buzzwords and catchphrases at you that you see on social media.
Can't stand it.
You need to call someone that, ask your parents who they used. Ask your friends who just bought a house, who'd you use? And sit down and have a conversation. Pick up the phone. Don't text, right? Don't just have a chat bot on AI. Say, hey, what's going on? And ask questions. There aren't dumb questions in real estate. There's just dumb people that don't ask questions in real estate. Right? This is
Ouch,
a long.
That's a little harsh, but true.
This is a long-term situation.
Yeah.
I don't want to say gambling, but you are investing the biggest thing you'll ever do in yourself and in an address. So make sure with whom you're putting that money in, both your time and your finances, that you're asking them all the questions to set you up for success. And this should be, for home buyers, an educational experience through and through. This shouldn't just be, hey, I showed you a house, let's write an offer, call, click this button and get pre-approved.
Well, you don't do it every day, so people need to have the correct information, right?
And if you did it 20 years ago, you really don't know what's going on now because mortgages have changed dramatically.
Did it 5 years ago. You don't
really,
know what's
that's
going
true.
on.
And the
That's
market
not wrong.
is so different,
It's
Lisa.
so
The
different.
market is so different. And
I hate to say that to parents who want to help their kids all the time, but sometimes I hate to say they gum up the gears, right? Because they're doing this. I bought a house 30 years ago. Well, that transaction was very, very different than what your kids are going to experience. And obviously we want your help and we want your expertise, but you still need to, I hate to say, take it with a grain of salt because things are just completely different on how it's done on the mortgage side and the products that are offered and how rates work, and all the different options that we have.
Right. Mortgage rates change. As we know, the inconsistency of them is not stopping. We have the best rates since April, except for the last 2 weeks. Okay, so there you go.
Right. Exactly right.
That's how it goes. And again, things are never ending changing.
Yeah.
So, all right, keep your eye on it. You always get those right people on your side. 248-539-9797. It's the Hardcore Mortgage Real Estate Business Show. Got to throw it out there. We are brought to you by Capital Mortgage Funding. You can reach us at 1-800-LOW-RATE, the best mortgage banker.
Us.
Also powered by CMG Home Loans, Equal Housing Lender, NMLS 1820. We offer every program. When you want to refinance your mortgage, we're going to be there for you. We've got all sorts of programs. Again, Lisa, you brought it up. You need a construction loan. We've got it. Renovation loan. We got it. All sorts of programs to fit your needs. Give us a call here on the radio show, 248-539-9797. We'll be right back. Welcome back to the Hardcore Mortgage Real Estate Business Show, 8:30 in the morning. What a gorgeous day it's going to be today. Maybe some rain later on, but get out there if you're going to swing the clubs.
Tiger baseball.
Is it an afternoon or not? Usually I go check with Paul, but they're fixing this. All right,
1:40.
Afternoon game down there at the park, so lots to do. Again,
short day for Pat Caputa.
All right, get out there. Be safe on the waterways. I always come up with these little reminders here. Again, 25 years doing the Hardcore Mortgage Real Estate and Business Show on Saturday mornings in the summer. We're lake people here in Michigan. We hit the golf courses and stuff. And be careful not to run into any ex-hockey players, too. We'll get to that maybe a little bit later.
That was crazy. Did you see that?
Funny story,
that was a video.
Hey, man, stay away from them angry hockey guys.
I do both. I hit the water on the golf course.
But look, I'm just going to throw it out there. Folks, come on. You're the captain of your boat. Let's throw it out there because we've had drownings and stuff. And I'm telling you, this is my serious take. I had some lunatic on the lake. Had a little trouble reporting it, but a lunatic out on Sylvan Lake last week. Hey, if you're a fool on the water, stay off of it. Don't drink and drive. Don't do stupid stuff on the waterways. If you're a captain of the boat, your responsibility to make sure there's life preservers for everybody on there. Everyone understands you don't dive into a lake. You don't know the depth of the lake. You're floating in the 30 feet. All of a sudden, you swing, and now you're in 2-3 feet of water, and you're diving in, and you're getting injured. And I just want to throw it out there again. Harry, we're a sports town. We're a lake town. We're a lot of things here. Becky Alley's line. I'm going to steal it. We're everything town here. Yeah. And again, be careful out there. Hey, we're hardcore. We handle things the right way, too. Mm-hmm. Just be safe on the waterways again, and don't drink and drive and do all those things. All right, I got that out of the way here. Michigan has been on a roll. We've been jamming, of course. Everything about this state. It's like it went out about, I don't know, I'm going to say about 10 years ago to all the other states. Hey, we got this great place called Up North, and people have been flocking there and buying the rental properties and buying their second homes and vacation homes, and keep running into families here that are even considering, hey, I've lived here my whole life, and they're moving up to Traverse City and Harbor Springs and some of these unbelievable areas, and some even the other towns. Glad they just want to get away from it all. So much to choose from here.
Well, it's a great way of life here in Michigan, and people from other states recognize that. And I've had people as far away as Boston, Massachusetts, come up north and buy houses on Lake Michigan, in Charlevoix, in Petoskey, around Traverse City, because you know how expensive it is to buy a house on Nantucket.
Oh, yeah.
Okay.
Right. You better have some millions.
I'm not kidding you. I had somebody come in from Boston. They bought up north here. Look, I don't have to tell you, Chicago, metropolitan Chicago, Chicagoland area, where do they vacation?
Here.
All around Lake Michigan, here on our side of the lake. Right? That's what they do.
Because they're afraid of the Wisconsinites.
Well, it's just a great place to live. Look, the summers are phenomenal. The winters, if you're an outdoors person, you're a hunter, you're a skier, you're a hiker, we've got it all here, and that's why. And the safest place to live in terms of weather elements, we think it's cold here, but that's it. All you have to do is take a look around the country. Tornadoes, flooding, crazy heat waves, all those kind of things. Here on the in the Great Lake region is the nicest climate to live in all year round.
Yeah, it's nonstop. So just keep your head up here, Matt, because things are looking better on the buyer side. So that's the latest news, Matt. You'll have to tell me if it's true or not. Some of the largest inventory gains have come across our region. It says here in the Midwest it's up about 21%. Inventory's up 21.3%. Matt, tell us what it is truly. You're in the trenches every day here. What are you seeing? Is it swaying a little bit towards the buyer side now?
Yeah, I think it is, and I think it might just be like offer fatigue. I think people have, people in the last 2 to 3 years who have bought houses have told their friends about, how many offers they've written, the multiple offer situations, having to pay over ask. So I think people are getting into the market are less inclined because they hear the resignation in their friends' voices, like, oh, you had to submit 17 offers, you had to see 100 houses, you had to be told no so many times that they're kind of figuring, should I maybe not do that, or should I be, I've always told, first-time buyers especially, the 7-day rule, right? Let a house be on the market for 7 days, and if it's still there, let's then go see it, right? Let's not rush into something, hit a buzzsaw of, hey, we've got accepted offers, but we're doing, our 5th backup offer if you want to be that guy. So I think what you have is that buyer fatigue, people just slower in the market. I had a new listing in Westland, it was perfectly priced, but the traffic was a little bit light just for the same reason as, July 4th, people aren't rushing out to go see houses. They're seeing, hey, if it's around in a couple of weeks, we'll go back out to it because we just don't want to be competing in, with the 6.5 to 7 interest rates. I don't want to put another 30 to 40 grand on top of that too. So I think that's kind of the main driver. And then houses are sitting a little bit longer, so inventory increases. So, hey, now I have a pick of things, or I see a price drop, so I can, that 490 is now 470. Well, what about 460? What? Or what if I get those, concessions or whatnot? So that's kind of what I'm seeing is even the right priced houses are sitting a little bit.
Yeah, I just got a text from one of our realtor partners, and she said exactly what you guys are saying. Inventory levels are seemingly going up a little bit. Houses are staying on the market a little bit longer, but not if they're in move-in shape and they're priced properly. They're even coming in, she said, at over ask.
Yes.
Okay. So you have to be prepared. Again, it's all individual. It's all specific to that house and that property, that location, right?
And that localized market,
and
too.
That market,
because, you're going to have some areas like you mentioned earlier, like Northville, right? That's still going to go like in hours, right? But other locations, it's still going to take a second.
So Lisa, Matt, and Harvey, what we're really talking about is you have to be prepared in this market for anything to happen. Okay, you have to be able to act fast. And I don't know that there's anybody better in the market at making sure their clients are prepared than Lisa. And Lisa has people that she's been working with for, years. Forget about months, for years, that when they're ready to pull the trigger, Lisa, it's all there. So explain that whole situation and how you get people ready.
Yeah, everybody, we've talked about this all the time. It's not a cookie cutter answer to your question. Someone calls in, they're like, they have what they think is a simple question. But the reality is in order to prepare somebody to buy a home, we have to kind of evaluate their whole situation. And sometimes they're not quite ready, or they're ready, but then we go through all the numbers and they're like, you know what? I just feel like I want one more year to save. And we respect that. We help them. We come up with the plan. We have programs like Home Funded that helps people save, where we have matching funds towards that. There's so many things, but throughout that journey, it could be that we need more money. It could be that we need a little credit boost. It could be that something happened in the past, and we're going to show you how to maximize your credit score, and I'm going to say minimize your debt to income ratio. Sometimes people don't understand how that plays in. They think they have a $3,000 debt and it's not a big deal, but the payment on that is $135 versus your $5,000 credit card with a $35 minimum. And they're worried about paying off the credit card. Yes, for interest, I get that. But if you're trying to qualify for a mortgage, you want to pay off the one with the higher minimum payment. We help them through all of that. So they have the most money available to them, the highest cash flow, that they're in the best position they can be to buy a home. So they don't have to worry about once they get in there if taxes do go up as expected. We've gone through all that. And it's preparation. The reality is all of that takes time. So if you're looking for, I just want to call and get some numbers and send me a pre-approval in an hour, I'm going to be honest with you, I'm not your girl. I am not your girl, because I'm going to set you up to fail. And I'm not saying that everyone will fail. There are obviously going to be people who do that and are successful because they might have phenomenal credit. But the reality is most people don't even understand what they're getting into. And I want everyone to know these are their options. In fact, Matt and I have a client right now, and she's like, I want to know all of my options. And I think I sent her, it was at least 10, maybe 12 pre-approvals for all the different loan types that she qualified for. You qualified for FHA, conventional. She had a MISHDA, a home, everything, because she wanted to know. I love clients like that. They are my favorite. I want to explain this to you so you make the best decision. And when you move in that house that you've gotten in for, the least amount of money you could, at the lowest closing cost you could, got the best rate that you could, the lowest payment you could, whatever your source of anxiety is that's keeping you from moving forward. We're going to address that and make sure that you know exactly what's going on. And that is my favorite part.
There are so many things I could go off on a tangent about that people just want, a McDonald's of the mortgage industry answer. And it's not the way it is. I'm proud of that fact, Lisa. I'm proud that you take the time with your clients, with our clients, and explain everything. People want and deserve that attention. And when Lisa says, if you want to go a 1-minute dissertation, I'm not your girl, people understand that that's serious. Take it seriously, and we're not just going to tell you what you want to hear. We're going to tell you what you need to hear. Now, what you do that with what you want. Not everybody can accept that. That's why this is called the Hardcore Mortgage Real Estate Business Show. We're going to tell you the truth. So, Maddie, that's why you're on the show. You don't sugarcoat things. We don't either.
And to Lisa's point, kind of like pulling the curtain back too, if we write an offer on this house, this client's putting like $2,600 down to buy a house in Troy. Right, that's not even a security deposit for a house in Troy.
No joke.
Or an apartment.
Or for an apartment.
Or an apartment, right? So that's not even a security deposit. You're securing a house where you're going to put equity and build a future, right? So,
but we came up with a plan because they want to buy this house and it needs some work, but we don't want a renovation loan.
Exactly.
So there's other things that you can do, as Matt just said. So we talk. We're like, well, what's the game plan? And then the client called me, and sometimes because mortgage lingo can be evasive a little bit, and
Yeah.
she's brand new. I wasn't 100%. I thought I understood, and I'm like, what do I do? I hung up. I called Matt. Matt's like, let me call you back in 5. Guess what? When Matt says he's calling you back in 5, he's calling you back in 5. He calls me back, and he's like, what's going on? And I kind of explained, like, this is what she said, but it's not quite making sense. And I was like, now I know what she's really requesting here, and we can come up with a plan to make that happen.
Yeah. So it's all about the people that you're working with and surrounding yourself with. And again, if you're thinking about, hey, should I lease or renew or whatever? We're buying a house in a great neighborhood, great schools for less than $3,000. So if you're sitting there thinking about which apartment you should buy or which apartment you should rent or what house you should be renting, and your security deposit's gonna be more than $3,000, you're already spending more than it would take you to buy a house.
Yeah, first month's insecurity, you're right.
Yeah, so it just take the 5 minutes to call and say, "Hey, I heard on the radio that I can buy a house for $3,000." What's the reality behind that?
Those
And honestly,
people told me I could buy a house.
It's about structuring the deal
Yeah.
and making sure this person qualifies for a program that helps. But, you know, and again, doesn't mean that it's going to work for everybody. But
or every plan.
But you got to call. You don't know.
And when I talked to Lisa, when I bought my first house in 2015, I was talking with Lisa in January. I didn't close till July. So you can have that, hey, how do I buy a house for $3,000, $4,000, $5,000? And have that conversation now to set yourself up so where, November, December, January, that might be the right time for you. It just depends. You need to have a qualified conversation with a qualified individual to figure out what's best for you and how to put yourself into this.
All right, I'm just going to go on top of that down payment assistance. Yes, I got a client closing this coming Wednesday. $1,000 earnest money deposit. He's bringing $1,000 to closing. Yeah, thereabouts. Right. So you can purchase a house for a couple $1,000s. Again, 1% is the minimum requirement if you do the Michigan loan, and we can talk more and more about these. We're up against our last break of the day. That's okay. We got more to share with you here on the Hardcore Mortgage Real Estate Business Show. The rising child care costs, that's right. Would you believe it? From 2021 to 2022, just in 1 year, even child care costs have gone up 9%, making it even harder for families to save for that down payment. All right, we got ways to save for money for a down payment and a lot of great ideas how to get you to become a successful homeowner. Keep it here on the Hardcore Mortgage Show, 248-539-9797. We'll be back. Alrighty, welcome back. It's our last segment here, the Hardcore Mortgage Real Estate Business Show in our
Always goes
25th
so
year.
fast.
What's going on? Lisa and Matt Bush on the other side of Harry and I, and Matt Bush, of course,
We're
with
doing business.
Remax
Yeah, we are.
First. Is that it?
Remax First, baby.
Remax First.
7
All right, a little plug
offices, the
there.
best to serve you wherever you need.
There you go.
Royal Oak, Chesterfield, Rochester, St. Clair Shores, Clinton Township, Shelby Township.
Wherever you want to buy a house. And, of course, the great Lisa Lawson over here to Matt's right, and I'm Harvey Freed and Harry Glanz. If you want to give us a call, 846 here in Metro Detroit.
Somebody
Pat's
call and
coming up
argue
next.
with me. Let's go.
Yeah.
Come
No, we're
on,
not
make me
going
feel
to.
at home.
I'm feeling
Come
feisty
on.
today.
Yeah.
We've got Pat Caputo, Mark Ryan coming up. They're going to be talking sports here, and of course, Tiger Baseball coming up at 1 o'clock. So that game's going to be off and running here live on 97.1 The Ticket. Went to the break and started talking about more cost out there. Of course, the cost of things have got really expensive, and then it sort of swayed me into, as everyone knows or doesn't know, we moved offices recently, Harry. If you're going to kick me under, hey, we moved offices to a nice newer office, and it's really cool out there. So
I had a nice newer office. The old one was nice too. We were just there for a long time. Hey, we
Trying to put a
didn't
twist on
need
this.
this. I didn't need 20,000 square feet.
Yeah,
Yeah.
it was huge, right? We just didn't need
I mean, come on.
20,000.
I will
So
say that
I
like all the deer and turkey we get now at our new office.
Yeah, we have nice. Hey, we have nice wildlife near our
Yeah,
new
we do.
office.
And we didn't have that before. So
Nice. So we're centrally located. We're off of Telegraph. And again, if you still want to come into the office and see us, that's great. We used to do things the old-fashioned way. We still do. If your family's out there and you want to look out for your kids or first-time home buyers, one-on-one meetings. We'll go buy the coffee. You come into the office. We'll sit down for an hour or two and go over everything from A to Z. Being able to talk with a mortgage lender for about A to Z and everything that happens from the time you run that credit report and start talking about home
But Harvey,
ownership
I want a
to the
5-minute
closing.
answer. I want a 5-minute answer. I don't have time to
We'll
do
get
it.
you a 5-minute answer if you need that also. But, Harry, as we were moving, I had boxes and boxes of handwritten shows. I'm showing everyone here, if there's a camera, these are handwritten shows. For about 23 years, Harry, I would sit down on a Friday night. This is all true. I won't go out on Fridays and write about 2 to 3 pages worth of mortgage articles. I'd read them and break them down and real estate news and share them. So I had one from 2017, and I just pulled up, I don't know, this one here. This is July 29, 2017. And by the way, anyone out there that wants to say we said something wrong, go ahead.
Yeah, go
because
I want
we
them
were
to,
around.
please.
We were around in 2007 and 8 and 9 when there was everyone was losing value.
Right.
Go back, play the tapes. We said hang on to the
We
house
said,
and
stick it out. The value will come back.
Yeah.
We
we're
absolutely
giving
said
good
that.
advice. I'm not just patting ourselves on the back here. What did this one say here?
You
And
can
I was
pat
talking.
yourself on the back.
We can a little bit. So the local housing markets, going back to 2017, the supply, Matt, was 2 to 3 months. We're dealing with that now. It's really about the same thing. New construction around town, this is what I wrote, was jamming, but they were having trouble in 17 keeping up with the demand because of the trades. Do you guys
Yes.
remember that?
Yep.
Everyone left town on us, and because the value started to sink. So it was a little funky here. New construction was picking up. We needed these homes built. We just didn't have any builders. We didn't have guys that could do rough carpentry.
and 3 years
finish
later,
carpentry.
COVID hit, and then we couldn't get materials.
Then you
I
had
mean,
the
it's always
material
something,
issue.
And now we
right?
got material costs on the rise.
Right. It's always something, but it shouldn't preclude somebody from the dream of home ownership. You know what I mean?
Well, because it never had real estate. Having a conversation last night with some people. Real estate is a long-term play.
Yes.
Okay, Matt, you've experienced the flipping thing. Flipping is not for a novice. Flipping homes is for experts. There are people out there all the time looking to do that. They do that as a business. However, real estate is a long-term
Yes.
play. You're going to make out if you stick it out, right? You're going to make out if you stick it out. Long-term. You cannot look at real estate as a short-term play.
All right, we got open lines here, 248-539-9797 if you want to join us. 8:49 in the morning here, all around Southeast Michigan. Yeah, it's muggy outside, that's right. Bring your fan with you, bring an extra bottle of water. Matt, we're always talking real estate and mortgages here. Let's talk about any recent listings that you had that went down. If you could give us a little information,
Yeah,
something
so-
that we can put our hands on and say,
So
this is real.
We're still kind of in that shortage. So we're seeing month supply increase, but it's still sub 2. So sub 2 month supply. So the balanced market typically going to be closer to 6. So we're still in a seller's market for the most part. However, sellers aren't kings anymore, and they haven't been kings since 2022, and they're really falling off their pedestal. So it's one of those things where now's the time to go, get a great deal on a good house, and you're going to be trading up from that 3 to a 6, 3 to a 6.5, but all the equity that you've built in that last house, right? You're gonna take that 3-bed, 1.5 bath ranch or bungalow. You're going to make $120,000 on it that you're going to roll into this next house.
Well,
and you're going to keep your
control.
payment relatively kind of in the same spot.
You know, Matt and Lisa, it's about controlling what you can control. You cannot control the interest rates, but you can control the house that you want to buy.
Absolutely.
And you can control your own situation in there, and you can control what you want to make as a mortgage payment. And I'll throw it out there because I'm so adamant. If rates come down, if they do, and it's conducive for you, and we can save you money, we will. That's an if. It's not a when. It's an if. So you have to control what you can control. You cannot control what your rate's going to be. The Federal Reserve does that. So I say if the timing is right, you don't wait. Waiting will cost you a lot of money.
Right. And the Federal Reserve, just to piggyback, doesn't control a mortgage rate.
Yeah.
The Federal Reserve controls short-term lending, but there's a trickle effect and an influence effect because it's really the bond market that is the most impact on mortgage rates. And so people all the time say, "Oh, the Fed's cut the rate. Where's my mortgage rate cut?" And I'm like, that's not how it works. So I just want to kind of clarify that.
And I'm still waiting for that crash that we were supposed to get in 22 and 23 that
or
everybody's
20,
waiting to buy.
It started in 20, remember?
Yeah, that housing crash that everyone's waiting to buy a house.
waiting.
Those dudes stopped calling and ticket texting.
Yeah.
When we call them back off the air because they would send
They
us
won't
those
answer
tickets.
the phone.
They don't answer the phone.
They won't
so
answer the phone.
We know
I've done
that.
it every week. Anytime we get a negative,
Yeah.
I call people right back. They don't answer the phone.
Yeah, stop ticket texting if you don't want to talk to us.
cowardly,
And,
yeah.
Oops. Yeah, that's a whole other subject, too. Again, open lines are 8:52, just a few minutes left of the show. And we always like to go over some things. But one of the main things I like to talk about is all the great lenders. And I'm going to pat some of you guys in the back. We got some great lenders here in Michigan. Don't go out of state. It's a no-no. Sure enough, got the call. Out-of-state lender, got the funky appraisal, which actually wasn't that funky, but it just wasn't, the loan wasn't set up properly. And again, there's now they're trying to get answers. And they've spent some money on an appraisal. And I saw an $800 appraisal. It was just a regular house. Even if it was going to be an investment with a rental, they're not $800. So again, clicking buttons, dealing with out-of-state lenders, not always a good method because you don't know who's on the other side of things. And we used to talk about the NMLS number. Well, there's a way to track people, at least how long they've been in the industry. How about if you ask somebody, how long you've been at this craft, and do you have a support? I'm not saying that somebody who just got in a real estate here or a new loan officer is not qualified. If they've got a team of professionals helping them, then they are qualified. But these are tougher conversations. I'm trying to get folks away from clicking buttons. I know it's not going to work for me.
You were big on that. You were big on the NMLS number, and that's okay. And I understand where you're going with that. But it's really about the experience of getting people into the right situation. You know, maybe there are 4 or 5 different programs, like Lisa always points out to people, that you can have an option on. You want to explore all your options.
Choices.
Listen, most of the loans that we do in our area are 30-year fixed, conforming, conventional Fannie Mae, Freddie Mac transactions. That's the vast majority. We do a lot of FHA financing. We do a lot of VA financing. We're talking about the vanilla loans that we do are mostly the conventional loans. Do we have other programs? Absolutely. Do we know about them? For sure. Can we educate you on them and not put you into a box? Because for our purposes, no. Lisa, all of us will put you in the program that fits you the best, right?
But we have
Absolutely.
to talk to you to find that
Yes.
out. We can't just, send our AI chatbot to ask these questions.
Right.
There's a time and place for, AI, right? You want to play on social media, that's great. But when you want to invest your future, you need to talk to somebody that knows what they're doing.
And your money.
Yeah.
I mean,
part-time.
no-brainer.
Yeah. Real estate is not a part-time job. I'm sorry. Lending isn't a part-time job. If you do this on the side after your shift at Chipotle, love you, but
Their food. I like that stuff over there.
But
but it's not the same. And
Yeah.
you need to be available because, even though the market might be slightly softening for sellers, it is still hot. You still have to be
Right
available.
on.
You can't sit there and say, someone saw a house, they let's go see it Thursday, and we're having this conversation on Saturday, and you think you're going to wait 5 days. That house is most likely going to be gone if it's priced right.
And relationships matter, right?
Yeah, it
when I'm
does.
showing a house or when someone's showing one of my listings, and when I get an offer from an agent that I've done work with, spoken with, I have a relationship with, versus some person at XYZ Realty or XYZ Lending, when you have a relationship with that other agent, you know that they're going to get the deal to the closing table. The lender's going to get the deal to the closing table. There is no worse feeling in real estate than telling your seller to accept an offer and then having to go back and say, hey, the deal just fell apart, something with the lender, or this agent told me this, but reality is this. You go back with your tail tucked between your legs, and you hope that they don't just say, hey, well, thanks for trying, but I'm going to go with somebody else.
Harry didn't like one of the phrases we came up with a few years ago in this industry was the
relationships matter.
No, not that one. Was date the rate and marry the
Right.
house.
Don't
But there's other things that have come along around the years. But anyways, let's just go there real quick. Just for example, as what Matt was saying, just this basic thing of getting a mortgage, you've got to worry about your employment, what type of income you have coming in, pension, Social Security, alimony, child support,
Overtime.
assets, debts, I mean, just
Commission.
that little phase of things. We have to break all that down for you to make sure the numbers do jive. At least sometimes what we think we're hearing and then what the paperwork shows is totally different.
Yeah, and you have to know. You know what I mean? Things can change very quickly, and that's why we get all the information up front.
Yep.
All righty, we have finished another show. Matt Bush, want to thank you for Remax
Pick
first.
up the
great
phone.
Matt Bush. All right, give us a call at Capital Mortgage Funding throughout the week. 1-800 Low Rate, the best mortgage banker. We'll hook you up. For Lisa Lawson, for Harry Glanz, I'm Harvey Freed. Say Pat Caputo, he's in the bullpen. He's got his pitches in. He's ready to come in. They're calling for the righty or the lefty. I don't know what he throws, but
Let's
here
do
comes Matt Ryan,
Short
Mark
show.
Ryan,
Short
and
show.
they're all coming in. All right, keep it here on 97.1 The Ticket. We'll see you next Saturday.